Hi, this is Rob. Thanks for joining me here on the history page of day trading targets. What many traders do not realize about market movement is the fact that the market moves towards goals. And uh, when the market is moving towards a goal, it behaves entirely different than it does most of the rest of the time. And so what happens typically is when the targets come out, and this morning crude oil coming out right here at this time on the chart and giving me a target of 92.50. And what I would do at that time is I would come over to my chart and I would simply mark out that 92.50. Now I have NinjaTrader here, and this is a platform that I've done a lot of work on. And so you may be using an entirely different platform for day trading targets. It doesn't really matter which trading platform you're using. But once this market goes into its cycling towards that goal, it's going to want to complete it. Otherwise, the market is going to struggle to turn around and go higher. Once that goal is met, I would expect the market to consolidate or for it to potentially continue, but the probabilities are lined up such that once we get down into the region of this target, that we're going to either consolidate or turn around. And more often than not, those who follow day trading targets levels will know that this is what's going to occur. Now, what I typically suggest for users is to not put the goal right at the target, because sometimes you do get front running right inside that level. And so I'll usually go inside a few ticks. On crude oil, I might even go up to the 92.55 area. On something like the Russell or the ES, usually a couple ticks is good. Of course, in reality, the market could turn before this time, or it could just blast right through it. But this is a level that is computed to statistically show at what level traders are going to begin to agree that the market has gone too far off of the open. And so in this particular case, right around the open, which as I said was right here, I can mark that for you with a vertical line. The market open is here, somewhere inside of this bar. And so the market's going to make this movement, and at this point that it gets down into this 92.50 area, traders are going to begin to start thinking, well, wait a minute, I don't want to initiate new shorts down in here because it's too dangerous. And so the market will either consolidate or tend to turn around in this region. So these are key levels of support and resistance because they're points where traders have certain agreement about market movement. Now, they may not be aware that they have that agreement, but on a statistical basis, they do. And so this is what's important about the day trading target service. These are critical levels, and these targets get hit a pretty high percentage of the time, pushing 80%. Crude oil, on average, tends to run a little bit lower than that. If you go inside a few ticks, it runs certainly pretty darn close to 80% of the time these target levels get hit. Now, some people will ask the question, well, yeah, Rob, but it could have gone to this other target as well, 93.90. And I say, yes, indeed, it could have done that. However, it was trending downward, and you certainly knew by this point that the market was trending downward. It had cycled lower and lower and lower again. So the question that I ask as a user of the service is, from 93.10 down to 92.50, how much is that? Well, it's 60 ticks, and that is $600. So the question is, if I can get into a trade somewhere around this 93.10 level on about a $100 stop, maybe even a $140 stop, and there's an 80% probability that this market can go down to 92.50 area, let's even say 92.55 or even 92.60, that I expect it to go to that level. It's $500 of price movement. And if I can do that with $150 stop entering at this level, then I have a ratio of over 3 to 1 with an 80% probability that the market will go to that level. Then it's just a matter of gritting my teeth, getting into the trade, and sticking with it. Sometimes I'll have a loser, sometimes I'll have a winner. But when my ratios are 3 to 1, as they are in this case with crude oil, in this example, things over time are going to line up in my favor. And that's really what trading is all about, having things line up in your favor. So I know that there's about an 80% probability we're going to get down, right down into this 92.50 region. So I'm going to pause this video, and I'm going to wait for this market to come down to that level so that we can see what it looks like when it's finally hit the target. So I'm going to pause now, and I'll be back in just a minute. Hi, we're back. The market has come down to my marked level around 92.55 or so. I always tell subscribers to take their profits a little bit inside the mark, because often what you will get is front running. This is where traders come in early at or around the mark. Now, as far as the statistics go for day trading targets, we will not count this unless it hits that 92.50 level. But for our purposes as traders, for my purposes on the crude oil, I will be out inside of that level. In other words, I won't wait for it to go through. And on this particular trade, as you could see, I set that about 5 or 6 ticks above that level. Now, what this is doing, the use of this tool is helping us to do, is it's helping us to line up probabilities within the context of our own personal trading strategy. I know once that market goes into motion in that direction, I know what my probabilities are. And so much of this is covered in more advanced levels inside the training on the site. But it's like Newton's first law of motion, which says once a body is in motion, it will continue in that motion until something acts on it to cause a change of that. Well, one type of change that you can have is a change in consciousness of the participants in the market that are participating in that market. And so this is an important concept. There are other concepts that you can use, and I cover these in the training. And there are even more advanced topics that I may address on the Day Trading Targets blog. So you'll want to subscribe to that and keep an eye on that. Now, markets behave, and this is really the core of what we're getting at here, markets behave in a certain way in pursuit of a goal. Now, once that goal is achieved, it's really kind of a different game, and so you reevaluate at that level. So another thing that this does for you is it provides a context for the market. So if you trade a certain market, each market has its own kind of personality. And so when you see how the market responds to the various levels that are provided by the targets, these statistical levels where the consciousness of the traders participating should change. And this, of course, is assuming there's not some great news out really moving the market. That's a different situation. But as you observe this market responding to these levels, it'll actually become a learning tool for you, because you will see how the market acts before and after and at or around these levels. So now, does it always work like this in this example that I've done here today? Of course not. There are times that it doesn't hit it. But I do know what my numbers are, and that's the important thing, is that I know that with about a 80%, just under 80% probability, that I'm coming down and hitting this target today. And so, of course, past performance is not necessarily indicative of future results. There is a risk of loss trading futures, and we might not hit that target on any given day. Very often, we might come within 1 tick of that target or 2 ticks and turn around and go the other way. Now, in those cases, we don't count those statistics. But the key concept that's going on here is we have a level where traders collectively agree that it's gone too far. The body is set in motion, and we know our statistics, and we just trade accordingly. So, and we only count the statistics if we get an exact hit. If we fail to get an exact hit, we don't count it. And what that actually does is it makes our statistics, if we're trading inside, a bit better than the stated level that we have on average. Now, I like to say that we have 94% targets and we have 77% targets. And I like to just round that into thinking of it as being about 80% or so on average, or just under that. And that keeps me a little safer as well. So will this market come down and tag that 92.50 level? Probably a good chance of it, just the way this market is acting. But for my purposes, I'm out for the day. So that's what I have for you. Thank you for joining me on this video of how to trade to the targets and the kind of principles of market operation that are in operation as we trade towards these goals. Hit them, and then what happens before and after. There's, of course, more advanced topics in the training section of the site. You may also want to check the blog, and also the FAQs cover any number of specialized topics. There's a lot of material there for you, so enjoy. Thank you for joining me. Go through the rest of the history page and see how we've done recently, and we look forward to seeing you inside the site.